It would appear that the last 3 times we've seen this exact signal, more than a $1,500 move has emerged relatively soon.
Let me into my zone. Let me into my zone. Please don't let me into my zone. 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 Please don't let me.
Welcome back to Krown's Clickbait Cave. People of camera number 1 over here, waking up for a nice and late Friday. Is it Friday? I think it is Friday. Hey, happy Friday. Have a nice Friday in your life. Means fucking nothing for us cryptocurrency traders because, well, cryptocurrency doesn't sleep, and it is usually the time of new opportunity of fuckery. There's actually some construction going on outside, and I am quite literally half naked right now. So, with that said, there's going to be some very awkward. Stairs relatively soon. Anyways, more important, I do want to say a little bit of a statement. If you are new here on this channel, for the people who have been here for a while, they already know, but the titles of this video and typically and sometimes even the opening statements of this video are just that clickbait type bullshit, which has very little to do with the actual content and sometimes like 360 degrees obtuse to the content, or maybe 180 degrees, whatever the fuck it is. Who knows geography or geometry or whatever it is as well. But more importantly, we got plenty to talk about on good old Bitcoin right here, as there quite literally are some pretty massive signals that should be giving us some pretty massive edges for trades that I do believe are going to be happening sooner rather than later now. So we do have some pretty damn good invalidation points and some pretty damn good action points. So with that said, of course, this is never financial advice. I'm not a financial advisor, but before we get into it, I should also say that today is the last day for the sale on all programs. That's the complete newbie program titled the Neophytes Initiation to Trading Technical Analysis. Also the Technical Analysis program, which is kind of like the evolution of that, like 4x evolution of that, as it's around 30 to 40 hours in comparison to the 10-hour Neophyte program. And then of course the options program, which is the evolution, it's like several evolutions beyond that, which is significantly more complicated. However, I do strongly rely on options in my own trading behavior. Anyways, more importantly with that, I won't go through the full explanations of them. Just watch the videos if you are interested in them in the links below, as that's going to explain who they're for, who they're not for, and to make sure that you get the most value out of it. As always, the biggest consideration from my end, or just the biggest one that typically like disqualifies people or qualifies people in some cases, is having the time and dedication to commit to something like this, because well, like I said, the greater programs like the technical analysis and option programs are 30 to 40 hours plus long, which means that in order to get the most out of it, well, you're going to need to invest the most time into it. As with anything, trading as a skill, or any skill at a high level, is not, I would never tell you that it's easy. It certainly can be done, absolutely. But it's going to require a significant amount of time and effort on your own behalf, in addition to having the right knowledge. So with that said, as always, take advantage of the free content on this channel first, and I sincerely mean that, because there's more than like 3,000 hours of fucking video content here nowadays. So there's plenty to chew through before kind of realizing if this is like something that you want to do or not want to do. Anyways, with all that said, I do want to now put the focus on the Krown trading application, as it's right in front of our very face, which can be found at app.krowntrading.net. And is free. Anyways, I want to put significant interest on the open interest, no pun intended, which, by the way, we're going to be bringing out a chart for this relatively soon. And, as we compile all the data and make sure that everything's, nice and good, because the problem with this in the past is that you can't really trust a source. Like one of the biggest issues with just cryptocurrency in general is the lack of valid source information, which makes, looking at underlying market dynamics very, very difficult sometimes. But we believe that we found a pretty damn good one right here. And more importantly, open interest has actually risen a little bit from yesterday to today, but still more or less flat. A $20 million increase is more or less nothing. What we're really looking for is like hundreds of millions of dollars of increase in correlation with the direction of price action to really denote a change of behavior and a move that is likely to be sustained. Whereas as it is right now, I consider this more or less flat over yesterday to today, which is going to tie into the analysis, of course, and more importantly, when we get into the actual content, which perhaps we should just go into right now. Actually, let's just go into it right now. But keep that number in the back of your mind. Keep this whole theory in the back of your mind, because we've been monitoring this extremely closely for the last ever since we put it up here, but especially in the context of our current price action the last 2 weeks now. So let's go over to our nice price action charts. Starting off Bitcoin, we'll start off with the daily. And Bitcoin actually did regain the yellow 21 exponential moving average on the daily yesterday, which is, I mean, it's obviously more good than bad, yes, but it doesn't really give us too much to be going off of as it is right now. We do see that the slope of the 21 exponential moving average is more or less flat and steady, which doesn't really give us a bias here, although the former trend is to the downside, of course. And right now we are at a major decision point. So the big bad thing that I wanted to put the spotlight on at the beginning of this video with that opening statement is our historical volatility percentile, as always, as this is absolutely crushed on timeframes that typically do produce some pretty large movements. This is a 4-hour right here. We've been steadily contracting ever since March 11th, and now we're at a quite literal piss powder of a read right here, which in the history of Bitcoin, and just in the history of all assets, this is a fucking mean reverting indicator. I mean, this is like one of the most important indicators, in my opinion. Has denoted pretty massive moves. The last time that we were this low was coming back on over here in late February, before this move from about $10,000 to, very, very quickly $8,500. But obviously, a lot more than that over time. But I just want to show that, relatively quickly, it does seem to play out, at least for that nice initial move. Before that, we have this nice move right on over here, another $1,000 mover. Before that, we have this read right on over here. Actually not as low, but does give it a nice move off the lows. And then more importantly, the time before that we've actually had a read like this was coming in all the way back from here before this massive actual shatter of price action all the way from above 10,000 down to 7,500-ish region. Anyways, also on that topic, we do see a very obvious time frame of consolidation on this, or contraction better said, going in all the way back from our major spike to the downside below a little bit below 4,000 on some exchanges right on over here. More importantly, whenever we see this long of a contraction phase, it correlates with a bigger expansion phase. So again, mean reverting indicator, meaning that we should expect some pretty big bad moves relatively soon. Now, direction is not implied by volatility. However, that's what our momentum oscillators are for, and also trend identification is for. And, well, the blue boxes of peace and prosperity can give us some good insights into that. I just want to show that when we do have these long-form contraction phases, it does usually, well, not usually, it does pretty much almost always result in massive expansions. So the last one that I really see over a long period of time was this guy right on over here from November on this hold down from about $9,000, this area right over here when we were putting on a lows at 6,600-ish region, contracting all the way through when we put in the actual low right over here in late December of the past year, and that leads on to the expansion all the way from about 6,500 to 10,500. $4,000 move right there, pretty damn impressive. We have another contraction phase right here, coming in from the $10,500 high on this spike, the good old China news, right? And what happens after this? Well, we start expanding to the downside on this major, massive move, all the way from basically 10.5 to 6.5. Before that, we have this major contraction phase right on over here, $14,000 high. I think that needs no explanation after that. And other than that, we have another major one right on over here on the breakout from about 4,000 to 5,500 on that first major move to the upside in April 2019, just a year ago. So actually almost exactly a year ago. And what's up, EHC Gures? Good to meet you, man. Welcome to the cave. And now you can listen to my raspy lesbian voice whenever you want, as you have now subscribed. So welcome, man. Good to have you in here. Anyways, more importantly, this contraction phase is actually bigger than all of the last few ones that we've just looked at. As you'd imagine, that the last few weeks of price action have been fucking insane, man. Really crazy shit. Very violent trading. I mean, this is like '08 type shit that we're seeing. If you're familiar with traditional markets, or if you're just a person in general who's familiar with life. Anyways, so I do believe that is going to line up with a major, massive break sooner rather than later. However, like I said, direction is not implied. So what are we going to do for direction? Well, we can go back down and actually mark off the exact same territories as we spoke about for the last few days here, and use this as a good buffer zone. And as you can see, we're still playing between blue box to blue box. Yes, we did get this is not really close above when I have the top side of the blue box right around, well, really should be around this wick right here, which basically got the high anyway. So, more or less the ease of conversation, just referring to it as 6,800 was not necessarily, fully accurate, but But if we were to accurately represent it, we would have gotten that next $12 in there, and fair enough. That's just the beauty of being lazy with my speech. But more importantly, it still gives us the same operating area. If we do break above this region, 6,800, I would look for a nice leap up, actually towards the 7,300ish region, right around here, towards this blue box. Now, with that in mind, and keeping in mind that volatility would likely be expanding at that point as well. Well, I'd probably really keep it in the back of my mind's eye that while I would expect maybe a short-term pullback right here, that could very easily have the next leap up into our next major liquid zone, which is not a liquid zone, but an order block at around $8,000, and that's going to change around the whole monthly picture, the whole higher time frame look on this, and that would make me a massive Bitcoin bull, especially if we could close a monthly. I mean, if we even close a monthly like this, it would look more or less okay. But if we close it above the 21 exponential moving average, which by the way is at 7,300, very interesting that would be the next blue box territory. They do seem to line up with each other very, very well. Then I wouldn't really be bearish on Bitcoin. I mean, we could come back down, maybe even base in the 5,500ish level again, but I do believe that would be a massive buy. But as long as we're below the monthly 21 exponential moving average, on a monthly closing basis, I am more or less angled to the downside and biased to the downside. More on that topic is the open interest that we were just looking at. Remember, for the last couple of weeks, it's been more or less flat, more or less steady, and price action has been floating up on declining volume and declining contracting volatility. What does that tell you? That tells you that a lot of this rally is born upon the backs of shorts closing. Is that how you typically see a true reversal happen? No. It's not. No, it's not. No, it's not. I mean, typically, you can see some pretty nice moves like we've seen thus far. Absolutely, 100%. But is that what you'd expect coming into a real reversal? It's not perfect. And these things can get extended. They can get extended more. Absolutely. But I just want to paint a picture that it's not necessarily, I still am a little bit geared on the side of the bears here, even though I do think that it's possible Bitcoin could have a very easy and quick move back up to about 7,300-ish region. I don't have a strong opinion on the short-term timeframes, but I do have a strong opinion on blue boxes and higher-term timeframes and the underlying market dynamics. So if we were to break above this region, yes, I do believe that at the very least, we'd see another $500 move, maybe $600 move to 7,300-ish region, and then potential to extend that another $600 to the 7,900-ish region, which is our next blue box. Well, I don't even have it in here right now, but we can do a nice order block right around here in the upper 7,000 between 7,750 and 7,950, which is going to be obviously very much above the monthly 21 as we looked at before. And that's going to drastically change around my long-term perspective on this asset. But as long as we're below there, especially this guy right here at about 7,300, I'm not all that enamored with that. And as we've just looked at, the underlying market dynamics are not necessarily painting the same sort of bullish picture. On top of that, we do technically have bearish divergence present on just about every time frame, I believe, up to an 8-hour maybe. Let's see. Let's make sure that this is confirmed. Technically, yes, we do, although I wouldn't say that this is confirmed just yet on the 8-hour. So no, maybe on a 10-hour. Let's see what the 10-hour looks like. No, of course, it's not going to be there. So the highest time frame that we actually have confirmed bearish divergence on is maybe a 6-hour. Yeah, maybe a 6-hour. But realistically, when you see divergence plays happen in the neutral zone right here, they usually don't have a high degree of playing out. So I would say that would be a counterpoint to what I'm saying at the same token. Also, we do have, more importantly, hidden bearish divergence on the daily. So, a decent amount of time frame right here between our 10th of March breakdown and where we are currently. And that's going to be viable as long as we're below the prior breakdown, which, by the way, is right around the upper blue box that we kind of just plotted out a few seconds ago. So as long as we're below there, that is a consideration. And as you can see, the RSI read when we were around the 10th of March was right around here, right? That is significantly lower than what we're dealing with right here. And technically speaking, we might even have a little bit of regular divergence being built up upon the daily RSI as it is right now, although not really. I mean, you do actually see them play out like that. You actually do see them play out like that fairly often, but it's technically not, even though I've kind of evolved my opinion on that as I've seen it play out. Anyways, on top of that, we also see, turn your eyes away. Hey, you who gets dressed by your moms in the morning and does cryptocurrency analysis, look away, because this is fucking bad right now. We got a 12-hour stoke cross to the downside, baby, or it's actually not confirmed just yet, but it will confirm on the next tick, assuming that we close here or lower. So anywhere below 6,700, that will very likely confirm in 2 hours and 37 minutes and 5 seconds. So a little bit of a ticking time bomb here, although, at the same point in time, if we did confirm a cross down, is it 100% done? Well, I mean, things can always unravel themselves, but coming in from this area right here, I'd say that the probability of that is not very high. And then also we are meeting this trend line right here. And I believe that longer term, what we're doing is something like this. These two trend lines seem to be very, very important from the 12-hour, not 12-hour stoke, or sorry, not 12-hour, I think I said 12-hour RSI, I mean 12-hour stoke, obviously. But our high is coming in from, well, right around here, the 9th of February, when Bitcoin was at 10.5 before this whole move to the downside. In our last few lows, we're coming in very accurately, coming in right around here on the 1st of March, on this major low right here before this, I think this was a $1,000 bounce from 84 to 90, 92, 93. Okay, so almost $1,000 bounce, then connected with this low right here, this low right here before a nice bounce from 76 to 81.50, another $500 bounce-ish region, so decent enough. I mean, these are more than 5% moves, by the way, so these are pretty fucking big. And then, of course, connected on the last drive to the low side right here, which is correlating with our low on the 13th of March, right around, the low 4,000s. So I do think that both these trend lines are very, very important. The problem is that we're testing the top side of this, which has been accurately getting our tops more or less for the last month or so, couple months now. Pretty damn well. And usually anytime that we get in the critical zone for the 12-hour stokes, they have a pretty damn high degree of playing out. Anyways, holy shit, man, this guy's just staring me right in the face. He has no shame. Anyways, fair enough, man, fair enough. So while it's like I really need to think about this now, not missing a beat, but let's go check out CMEs and see if there's anything, of note and obvious here. And on CMEs, I don't see anything that's particularly obvious. We got the same reads on, we do not have the same reads on the daily. We are still living well below the 21 exponential moving average on the daily. We have the same death crosses available, but more importantly, the 21 exponential moving average still has a negative slope and seems to, and we're very clearly operating below it right now. So if we do take out yesterday's low, that doesn't really do too much for me. The obvious trade is still below the 24th of March low. So I still have the alert right around there. It's 6,500-ish region on spot price action that would correlate with 64.57. So I'll put another alert right there as well. And anywhere below there, okay, this guy is this is getting a little bit uncomfortable now. All right, man, you want to listen to me yell all day? Well, fucking do it, baby. Anyways, if we do check out this low, that would also be good enough for continuation to me as well. So there's two ways of getting the downside for me and two ways of getting the upside for me. Although the upside, I'm a little bit more, a little bit more apprehensive with. I'd be much more interested in playing the downside here. Anyways, the downside is going to be denoted by either a 4-hour total closure below the blue box. We could also even move this up to 65.25, the last closing low right here on the 25th of March. Or if we just take out the low wick of that, again at 64.50-ish region, again is going to be where most major exchanges are, as that is where my my alert is, then that is where I would say that we're going to very likely see that expansion and volatility happen to the downside. We will very likely see a quick move all the way down to about 6,100-ish region, maybe a small bounce there. I don't have a strong opinion on that. It would just be low time frame bullshit. Ultimately, I do think that Bitcoin would come down actually a little bit below 6,000 into the 5,900-ish region right here, and then play out another short-term or medium-term time frame bounce before getting ready to curl on over. Remember, and let me just make sure that I'm recording. I am recording. The microphone's working. Remember that we still have this narrative to deal with. We still have this massive rising channel, which is a redistribution pattern. And when we're dealing with the overall trend to the downside, I would say that is more or less on the bearish side. But of course, it's not really fully bearish until we actually fully and formally break it. How do we fully and formally break it? Well, it's just so happens to be that the blue box to the downside, it correlates exactly with the bottom side support of this baby, coming in right around about 59.50-ish region and rising over time. So if we were to close below that, which I don't think is going to happen all in the same drive, but hey, Jesus Christ, figuring out that kind of shit is, trying to look into the crystal ball too far like that is really not a good idea. But If we were to break below this region, technically we would have a nice, relatively conservative measure move all the way down to 4150 to 4250-ish region down here, which would fit the narrative of not only having a rising channel redistribution pattern, also seeing volume tail off here alongside open interest relatively remaining flat, while volatility has been contracting the whole way through and price action has been slowly but anemically kind of rising. And it does seem to me that we're seeing a little bit of signs of distribution at the top right here as well. Although, again, at the end of the day, all of this is secondary to closing above or below the blue boxes that I have in place there. And even if we were to close above the top side blue box, while I do think that we'd have a quick move to like 72 or 7300-ish region, I would still be very defensive against like a quick move up there, like kind of like we got right on over here, and then close below 7,000 and play out some pretty nasty downside. So remember that as long as we are essentially above this trend line on the bottom side, which as we've said is coming in around a little bit below 6,000 now, and below this trend line to the top side, which is now actually coming in actually quite high, and as you'd imagine, depending upon how you draw it. But if we do 2 hour, I think it more or less works. And more importantly, on CMEs, it looks good. Yeah, on CMEs, it looks a little bit more obvious, and it would be coming in around 74 to 7,500 now. But if we extend that, obviously higher, which likely does open up the road that if we do break to the north side, we probably would hit up all the way here towards 7,900, which would be around that prior order block. So a lot of things lining up here. We're going to look at probabilities in a second, but I do want to do the overall groundwork for now. Now, on the 2 hour time frame, we do have a little bit of a golden cross in the making right here between the green and the purple, 55 and 200. However, do I really care about a 2 hour dildo golden cross or death cross? No, not really. But more importantly, a lot of the time you do see that when these things get really, 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 really close to each other, well, what typically happens? A lot of the times you'll get a fake out around them, and so if we are going to have a fake out, well, it would probably happen sooner rather than later, in line with the volatility analysis. On top of that, let's take it just one step further. Let's go back to Stamp. Let's go over to a 2 day dildo time frame. Remember the 2 day. We have a death cross impending. We are destined for death cross as long as we are below, especially 7,200-ish region, but even especially as long as we're below 79, like more so below 7,900-ish region. Now these two are getting damn close to each other. We are going to be getting another tick on this, not tonight, but tomorrow night at 8 p.m. Eastern time. So I imagine that we will see resolution on this either to the upside or the downside before then, as well. The bulls are going to have to defend against a death cross on the 2 day, which is going to really take a lot of bots and algos into heavy sell programs. And if the bears want to take control, well, they'll probably do it sooner rather than later, because this would be the time. All major moving averages are angled to the downside, and a death cross impending right here. The last few times that we've seen a death cross on the 2 day dildo time frame, probably not going to be all that good. Let's just go back on over here. The biggest one that I can kind of come up with on my mind's eye is going back to 2018. So I want to have 3 moving averages here: the 21, the 55, and the 200. And this works both the upside and the downside, but whenever we get a golden cross and price actions above the 21 exponential moving average, it's a fucking buy. It's a fucking buy. I shouldn't say that aggressively. It's a very good. It's typically a very good buy. It's the more diplomatic way of saying it, I guess. But and of course, it's not financial advice. I'm not a financial advisor, but as you can see, coming in through a consolidation as we get another test down to our lower period moving average, very, 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 very good area as 6,000 gets bought up all the way to 13,500, 14,000-ish region. More importantly, in 2018, we have something not super similar, but I do want to show the interaction between these two as we get the death cross running over here. And then it's not until price action is slowly but surely ground down below the yellow 21 exponential moving average right here, where it actually becomes an actionable trade, where Bitcoin drops off the face of the earth from 6,500 all the way down to 3,150-ish region. And as you can see right now, we're obviously well below the 21 as these two are getting close to each other. There's also something very interesting just as an offhand between these two, and I don't have the right chart up right now, and I don't really know exactly which one to reference again, because I actually clicked a link from, I should never click links, but I did click a link. But more importantly, the hash rate has a very similar signature, what we're seeing right on over here to what we're seeing actually presently as well. If you've been listening to crypto Twitter or crypto YouTube or crypto Reddit, you probably heard some people signing the signals, the war signals of the hash rate dropping like 40%, which is the biggest drop since when? Well, since October or November of 2018, as major moving averages come to the same junction, as the long-term trend is down. as Bitcoin is still below the 21 on the 2-day. And we see this. We see a similar reaction to this. The only time before that we have a similar example as well. Death cross right here below the 21. Nice move down, pops back up, tests the 55, and then big move down. So it's not exact. I really want to get away from the very strange way that I see a lot of people using moving averages and whatnot, and just saying like, we tested it here in this year, and we're going to test it here in this year. It's like, that's so fucking wrong, and it's so just like what the actual, like, this is going to turn into a goddamn meme, motherfucker, man. And I'm sure that open interest will soon enough as well. But these are very, 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 very useful tools in conjunction with each other, but I feel like they've been commandeered by probably well-meaning individuals, but they just don't really know what the fuck they're looking at. So with regards to that, I do think that I'm still kind of, a little bit more laid on the bearish side here, but I would be happy to change around my mind again if we do hit the triggers that we spoke about at the beginning of this video. Other than that, do we have anything to be aware of on the 3-day? The 3-day is kind of the wild card, actually. The 3-day is going to be closing tonight, and there's the 3-day is a wild card. I don't know what to make of the 3-day. Obviously, if we take out our current 3-day low at about 64.50, that doesn't really help because we already got that area from beforehand using simpler tools, actually. But it'd more or less solidify this area a little bit more. But it would say that we probably do have to wait until we get the next 3 days. So perhaps around the daily total close is when we will see this move become more and more likely to happen. So with that said, let's go back down to our nice chart of blue boxes of peace and prosperity, and also death and destruction. Put these on, and remember, the more preliminary ones are obviously going to be the gatekeepers, and I do think that they probably get it well enough anyways. But I also do want to be aware of our top side one right here, the obvious one at 73, and the bottom side one right here at about 59.50. And now let's go line up these areas with the probability chart. Oh Jesus, man, come on. Whoops. let me expand it a little bit right there. There we go. And let's get some single-sided probability targets. So to the upside, let's call it 68. Sorry, I didn't even really talk about the upside too much. I talked about a 4-hour total closure above this region, 68, 25 we'll call it, or a tick below our spike high at 69.84. Let's see what both of those are. 68.15. On the next 4-hour total closure. Let's see what the probability of that is. By the way, it is starting to squeeze down again. This is a 4-hour to be fair. Let's go to a 12-hour, which is flat-ish, unfortunately. Not really giving us too much, but the probability of that is actually very, very high, 40.5% in the next 12-hour total closure. And it actually is a little bit squeezing the upside on the 12-hour. I'm curious what the 4-hour is showing. 4 hours obviously downwards and a lot less of a probability of 19.37%. And on a daily, what are we looking at here? Again, angled to the upside actually, which says 43.4. So pretty damn good. Actually, if we're looking at it from this angle, the upside is more likely. So let's see what the downside now kind of comes up with. And so the obvious area for the downside is obviously the 25th of March spike low right here, or 4-hour total closure. I think we could probably even move that up another $100 actually to 85.40ish region. So let's go back and let's just use 64.50 because it's a little bit more. I think it's a little bit more obvious, but I do think that the other one probably gets it done anyways. And we'll do something like this. And what do you know? So our probability within the next day's worth of price action is 34.34 that we actually do close below. So the upside is technically more likely right now from a probability perspective with regards to historical volatility percentile. And who am I to argue with statistics? Same thing with the 12-hour, as you'd expect. It should be the same, obviously. And 4-hour is going to show about 2.5% to the downside of likelihood in the next closure, which is happening in 2 hours, 23 minutes. And 37 seconds. So not very likely right now. But what I want to show is, well, actually, I don't want to show anything. That's obviously obtuse to my own opinion. Let's see where the first deviations come in on something like a daily and see if that lines up with anything else. Top side is all the way at 7,500, 7,550. Bottom side is all the way at the 6,000-ish level. So I do like that area, 6,100-ish region, which we did say likely a short-term bounce if we do come back down around there. But this is really gearing the odds in the upside actually. Looking at the 12-hour, which has been phenomenally accurate as well. Yeah, we do see about 7,200 to the upside. I'd say 72 to 7,300-ish region if we get a test up there. Into the downside, what do we see? We see 6,300-ish regions. So it's actually not agreeing with what I'm saying, which it hasn't for the last couple of days. And usually when it doesn't agree with what I'm saying, I'm wrong and it's right, because it's fucking math. You can't really argue with it unless like the formula is wrong or something like that, which I don't really have reason to believe that it is. But as it stands, that would say that the probabilities are more in favor of the upside. So this is a game of probabilities versus underlying market dynamics, and also one of the few times where sentiments does kind of matter, because we are in a little bit of a global pandemic, which more or less is a black swan as far as I'm concerned. Okay, cool. So we've spoken about all of that. I think we've nailed that horse down to the coffin, or beat that horse to death, or whatever the fuck. Is there anything that would be really obvious as well? Obviously, weeklies coming down on momentum oscillators. We've got the same sort of trend line forming here as we do on the 12 hour, except connected with all of our lows going all the way back towards the December 2018 low at 3,100. Then more recently the October low, and then the December low. So I do like that area as well. What else do we have from a fib perspective? We're playing between the 786. Or we're playing at the 786 right now, so it's kind of what we're looking at. I'm curious if volume profile agrees with this as well. We're right at the point of control on the higher term timeframes. If we do move to the upside, it is free skies all the way up to actually 7,500. To the downside, it is a doom spike all the way down to low 5,000s. So yeah. All right, let's go check out traditional markets. Traditional markets carrying out the bounce that we spoke about earlier this week. I do think that it probably has a little bit more to go here. 265-ish region, which is going to set up the weekly for a phenomenal close, potentially. If the weekly closes above the 200 simple, which it tested yesterday, right around 264, and the 200 exponential moving average a little bit higher than that, about 266.5, then I would look for this bounce to get extended coming into the next week all the way up to the 275 to 285-ish region over the next couple of weeks. I do think that we'd see extension to those regions. However, just like Bitcoin land, I am a little bit apprehensive to say that the bottom is in just yet. Now, doesn't mean I'm going to be 100% right on that, but I do think that there is cause for concern to look at this as a bottom, as it is for like a market cycle. Now, of course, it's a bottom for a short term and medium term. I think that we called that one quite well, although I fucking hate that word call. It sounds arrogant, it sounds weird, but you get what I've been saying. Just the blue box testing all the way down around here. And we finally got our reversal conditions met for at least a medium-term reversal, potentially long-term. But like I said, the reason why I'm hesitant to call this one a full-on reversal is because every market cycle reversal that we've seen in the past in traditional markets, and also Bitcoin, by the way, has been accompanied by major bullish divergence for at least 2, usually 3 drives on, at the very least, the daily doodle time frame. Going all the way back, I'll let you kind of fit this one in, in your own analysis. But you can see if you test it all the way back down to 1980-ish region, you get at least bullish divergence on daily RSI for all those reversals on a market cycle, and even on like the major reversals as well. Same thing for Bitcoin. I forgot to cover this up, but I've been speaking about it so often recently, so you probably already know. So fair enough. But I do think that what I think is happening here is that we're actually seeing SPY follow. I think Bitcoin, gold, and some of the more interesting assets, they had a much earlier and pronounced bounce and also line with their more aggressive, violent dumping behaviors, and now we're seeing traditional markets kind of catch back up as I do think that they're being a little bit of a laggard here. But more or less, if we were to look at this on a weekly, the charts are going to be more or less the same still. Looking at this chart on a weekly, looking at it on a line chart, let me get rid of all these moving averages, and we can compare it to some like BLX. Whoops, come on, there we go. BLX index right here in the orange line chart, and if we put this back on log scale as well, you can see that both kind of turning up at the same time, and both kind of falling at the same time too. So when you look at it on a weekly chart, on a line chart, it's going to be pretty much the same, which is really how you should be looking at correlated assets or non-correlated assets, and judging that, and also from a standpoint of covariance as well over the long period of time. So with that said, let's go on and let's check out what else do we want to check out? Gold, maybe. Yeah, let's check out gold. Let's get rid of these. Let's get rid of this. Bitcoin and gold actually, you can see that gold is obviously being, leading them all actually, in fact. So gold is acting like the actual hedge right now. if you want to say it, if you want to say it as such. In the blue line chart, it's having a much more aggressive move to the upside. Anyways, I'm gonna get rid of this for right now. We can talk about correlations over the weekend because I don't think I have the stamina for that right now. But what I would say on gold is that if we close above the red 10 simple moving average on this weekly, which is closing later today, which is 1586, 1585 region, I would look for extension. Now, I did say as soon as we close the daily above it, we'll probably test the prior high. We pretty much already got that move, to be fair. But I would look for the next few weeks to retest formally the prior high and probably exceed it, into the 1700s. Again, granted that we actually closed today's weekly above 15. Let's just call it 1590 to make it easier and more conservative. But longer term looks pretty damn good, actually. I want to compare that with the other fucking pet rock that people seem to be in love with, which I have very little understanding for. Now, I actually hodl silver, but I don't hodl it in the same way that most people hodl it. I actually hodl it in my fucking ass because my ass is infected, and there's actually a medical reason for that. But I just want to show that on silver, this chart is in no way, shape, or form in any way, shape, or form comparable to gold, Bitcoin, anything else. It is like hanging on to the lows right now and in danger of kind of pushing off and probably making new lows. There's absolutely no reason to be bullish on silver as long as we're below like $16 at the very least. It can rally all the way back up there. That'd be fine. But I don't see any. I mean, this just looks like a dead heartbeat. It looks like a shitcoin chart. It looks like a fucking Cardano chart. That's what it looks like. It's just disgusting. And silver actually has uses, which is kind of crazy. but still, in an actual global pandemic, it seems like gold is going to be the preferred one for the world, and the dollar to a lesser extent actually as well. What else do we want to look at? Let's go look at German markets. How are they operating right now? A little bit down open on the day. Not anything too nasty here. I think that we're going to trade a little bit sideways and wait for US to make up their minds. Japan closed pretty much unched. Technically up almost 4%, but as you can see right here, it's more or less unched. Closing as a doji dildo. I do think that we probably put in maybe a little bit of a local high here actually. And do we want to check out anything else? Maybe a couple of top shit coins here. How about Mr. Butyrol? Mr. Butyrol looking a lot more like distribution than Bitcoin actually, a little bit more obvious. And we do you can draw the lines through with your own mind's eye and realize that this is do you want to call it a rising wedge? Do you want to call it a rising channel? Don't care what you want to call it, but the effect is the same. The effect is the same, unfortunately. And death cross running over here below the 21 exponential moving average and in danger of you losing the 10 simple. If Bitcoin turns down, I'd look for this one to come back down to 122. What about Mrs. Litecoin? Not as bad as Butyrol, but not as good as Bitcoin, kind of like in between those two. I do, if Bitcoin takes a northern road to like 72, 7,300, I would look for a quick move to like $43, but same thing to the south side. 35 and 3/4 is where I'll be looking towards if we break to the south side. What else do we want to look at? I think that pretty much covers everything. Already 36 minutes into this video. Bitcoin down another $20. Fuck. Anyways, I'll just briefly wrap this up right here. Tick below 64.50 and target to move all the way down here. Tick above either 69.84 on Mexico or a 4-hour total closure above about 68.25-ish region. And I look for the northern roads to be explored towards 72 to 7,300. Would be cognizant of a potential fake out in that region. I'm very, very defensive in this region to the upside. I'd much rather trade the downside right now. And if we do get there, regardless of whether you're bullish or bearish, I would look for a pullback from this region. But where do we close? If we close above 7,000, I'd likely look for a continuation overall to the upper 7,000s, and this monthly would look phenomenally good in the next few days when it gets to closing. But we're still a little bit further away from that, so I'll leave that for later. And for right now, I just want to wish you well. Take care, and I will. Oh fuck, I forgot to talk about it. I'll be on Twitch later too. I've been really enjoying it recently as well. Playing Total War there, it's fucking phenomenal. I understand that some people are not going to be too into that game, but I just feel like it's a great strategy game to kind of go along with watching charts in between. So I'll be back on that a little bit later today. Maybe even starting it even earlier today as well. So with all of that said, wishing you well on this nice start to your Friday morning over here from a somewhat cold but also bright Helsinki, Finland. Take care, and until next time.